I think we've all been curious. How is it that these brokers are going to handle this transition from going to commission-free trading from charging for commissions for trades prior? So we're going to take a look at a couple companies that actually reported earnings this week to see how exactly their bottom line was impacted by the loss of commission fees. So we're starting here with TD Ameritrade. They missed on their EPS, missed by 4 cents, so a little bit less profitability than expected. Revenue's down 15.1% year over year. It's only a $10 million miss according to what their technical guidance was, but take a look at that. So TD Ameritrade slides after Q1 2020. Non-GAAP EPS 74 cents, falls short of the average analyst estimate by a penny. Net revenue for the quarter was just short of the 1.3 billion consensus estimate, compares with 1.56 billion of quarter 4 previous quarter right there. That's wild stuff. And 1.52 billion of quarter 2 of 2019. So definitely quite a bit of a drop off. The revenue impact of moving to zero commission on the sorry, didn't mean to squeak there. Need some WD-40 still. The revenue impact of moving to zero on commission. I don't know why that's phrased so stupid. Moving to zero commissions was less severe than expected due to record trading. Quarter 1 transaction fees and commissions of 305 million fell from 502 million in quarter 4. No shocker, 537 million a year ago. Pre-tax margin of 38% declined from 47.6%, big decrease in margin, and 51% in Q1 2019. Average client trades per day of 1.03 million increased from the previous quarter by almost 200,000, so definitely good for them. Trading is up 40% January to date, averaging 1.4 million trades per day. That's a very, very good quarter. Very good quarter for them so far. But let's take a look at some of these numbers. As you see this lady with a chart. I don't know what she's doing. But so we'll take a look at some good stuff that they have for us. Not take super long here. So obviously net new client assets down 10% year over year. Something to look at. EPS down 35% year over year. A lot less profitable. Trades per day though, up 11% year over year. Definitely something to figure out. Take a look at that. And client assets up 23% year over year. Goofed that one. Net revenues were down 15% year over year though. So definitely something to consider. So definitely one thing I did want to mention too. Obviously you see this breakdown here of average client trades. Definitely an increase. I wanted to mention too. You'll see these stocks didn't really tend to drop that much, and a lot of it is just because this fear of loss of revenue due to commissions free was already priced into these stocks, and that's why I picked up TD Ameritrade when I did, just because they got hammered on the one day they all announced it. It was crazy, so I picked up shares then, and I think it's really priced in. The thing hasn't bounced back that much since, so for the most part, this decrease in revenues are already priced in, so you're not going to see that much of an impact because of these results here. So annualized growth rate of 9% on these net new client assets, and total client assets you see a continuous climb as well. Guidance, so for fiscal year 2020 they're looking for a growth rate of 7 to 10%, revenue of 4.9 billion to 5.3 billion. Not bad. Operating expenses of 2.8 to 3 billion. Tax rate from 24 to 26%, and 31-cent dividend per share. So a stagnant dividend there. Nothing too upsetting. I'm okay with it. If you look overall, historical financial results, look at this increasing revenue. But now they're guiding for, if you look back here, only around 5 billion. So we're going back to less than 2018 levels by their estimates, and that's really just all because of, what can I say, commissions. But you see an increase in client trades per day, which is very good. Net new client assets though is down definitely down. That's just year to date though, so just consider that. But they've been increasing. Definitely good to see there. And market cap in billions, it's pretty stale, right around the 27 range. Here's another thing too. What is the status of the status? We expect the deal to close in the second half of 2020. Charles Schwab buying out TD Ameritrade, that is. Just something to focus on when you're looking at this stock too. Obviously, frequently asked questions. You know, we like them, but do I like them? Not really. You know, we're done with TD Ameritrade. We're going to talk about the next guy, Interactive Brokers, which missed on an EPS standpoint by 2 cents, a GAAP EPS standpoint by 1 cent. Revenue up 1.6% year over year, but they did miss their estimates. So, I don't have their presentations on this. I really should have gone and looked for them, but I don't really have their presentations at the moment. I had the transcripts, but at some point, going through the transcripts, it's not as fun. You know what I mean? So Interactive Broker trails the average analyst estimate of 60 cents and is unchanged from a year ago quarter. Adjusted net revenue of $503 million and GAAP revenue $500 million falls short of the consensus estimate of $504.6 million. Adjusted net revenue rose from $496 million, and GAAP net revenue increased from $492 million. The revenue growth reflects an 18% year-over-year increase in the net interest income to $296 million. There you go. Partly offset by lower commissions revenue. Of course, no commissions. Commissions free, as the broker introduced zero commissions on online trades. Commissions revenue of $168 million fell 18% year over year. Yikers. What do you expect? Margin of 62%, which is very good. That's pre-tax, though. Electronics broker pre-tax margin of 65% versus 63% a year ago. Fantastic. And daily average trades fell 16% year over year, though. So definitely something to consider there. So again, you see that this, you certainly got hit quite a bit in terms of this revenue. This revenue loss from commissions is pretty significant. It's not easy. To just lose a big portion of your business. It's really difficult to do that. So next we're just going to look at E-Trade, who just reported earnings yesterday after market close. So they actually beat on a non-GAAP EPS standpoint by 1 cent, but missed on a GAAP EPS standpoint by 7 cents. Revenue down 7.6% year over year, but they beat their estimates. So take a look at that. Now we're going to look at some of the more detailed info. So, Q4 total net revenues of $679 million exceeds the $672.1 million average analyst estimate and compares with $767 million in quarter 3 and $735 million in the year ago quarter. So, overall, year over year, definitely decreasing revenue by a good portion too. A little bit over 10% in terms of year over year loss, right around 15% probably. Nothing. It was just what you expect, because you completely lost out on most of your commissions trades there. You lost all your commission fees, and it's a good portion of your business. So it's really hard to expect you to continually grow revenue if you're losing the main part of your, not necessarily main, but a very big portion of your business. In quarter 4, fee and service charge revenue of $181 million increased from $63 million in quarter 3 and $108 million in quarter 4, 2018 that is. So a quarter 4 total non-interest expense of $446 million rose from $399 million in quarter 3 and $382 million. So increase in expenses, and the adjusted operating margin of 34% fell from 48%. So definitely a big decrease in margin. Yikers. Daily average trades rose 21% quarter over quarter and 16% year over year. So definitely look at that. That is a pretty significant number. And I think you see that with a lot of it, really. So there's going to be an increase in trades because of the fact that they're going commissions free, more people are getting involved with trades, and they're not going to necessarily be holding off. Because when you had commissions, people were waiting until they had a large sum of money to invest. When you have commissions free, people will trade if they can just get away with buying a couple shares of this, a couple shares of that. Instead of having to lump sum everything into one big trade session, you can do it in multiple different parties, however you'd like to do it, multiple different days. So people are more free to just invest how they want. And that's why you're going to see, typically you'll see your daily average trades increase for these companies, but you're going to see a big decrease in revenue because of that loss of commissions trade. So in my opinion, I'm still good with TD Ameritrade stock, Charles Schwab stock. I'm not too keen on Interactive Broker or E-Trade right now, but E-Trade's definitely not an awful option. They've bounced back since their lows once everyone sold off whenever they announced commissions free, but in my opinion, these stocks they're going to be fine. Long term, they'll find ways to adapt and make more money in the long run, but obviously for now, commissions are going to hurt a lot, so that's just a sneak peek of what these companies look like. You can expect it from the other brokers in the future when they report earnings. It's going to be a similar story, so hope you liked it. Boop boop.